Hi, everyone, and welcome to this edition of the Insurance Experts. It's my pleasure to have on the line Barb Stahlecker. Barb is actually a short-term care specialist, and that's kind of an emerging market in the insurance space. Thanks for being on the show today, Barb.
Thanks for asking me, Mark. I really appreciate it.
Okay, so tell me a little bit about how you got into the short-term care industry.
Well, I've been in traditional long-term care for about 32 years. And about 6 years ago, as I was running a brokerage, the long-term care part of the brokerage, we started to see a trend that, like everyone did, where 30 to 40% of everything we submitted was getting declined. And it was my job to find sources of revenue. So I had clients who were willing to buy something to protect themselves. They were ready to write a check. So I just needed to find something for them to buy. And I started casting around the marketplace looking for something that would fit that need.
Right. And, people, they oftentimes fail to plan, right? That's the biggest cost of waiting for long-term care. But when they do so, you still want to have a plan for them. So how many states at this point have approved short-term care products, would you say?
Oh, somewhere between 35 and 40, depending on the carrier and the product.
Okay, so there are options out there in various states. And what do these plans typically look like from a benefit?
In benefits,
Yeah.
people usually buy somewhere between $100 and $150 a day for the facility. They'll buy something comparable for home care, depending on the way the policy is structured. That might be the same, that might not. But overwhelmingly, they buy a 360-day policy and a 0-day wait. Remember, Mark, these are people who usually have tried to buy traditional long-term care and they couldn't get it. So now they're trying to fill that, and they buy the longest benefit period they can.
I gotcha. And what would you say is the average age and the average premium that they buy as well?
In our brokerage, our average age is 72 years old, and our average annual premium is $1,100 a year.
Okay, so roughly close to $100 a month or so per person.
That would be right.
Okay, so it's still an affordable product, gets you reasonable benefits, and tends to be more for the health impaired individuals.
Yeah, absolutely true. Short-term care, you can get it for people who might be taking gabapentin, or the short-term care carriers don't look so hard at comorbid conditions like a diabetic who also smokes. That would be fine with short-term care.
Gotcha. So tell us a little bit about the client that you recently worked with. How did they come to you, and what type of needs did they have?
We had a couple who came to us. They were in New England, where their price of care is typically higher than the rest of the country. And it came to me through a financial planner who had tried to get traditional long-term care for this couple, and both of them failed the cognitive exam. And as you know, once that happens, there's really no place else to go. So the planner called me, and I was able to help him.
Right. And even if they have a longer long-term care event, having it covered for the first year or two is going to be a great benefit to their family.
Yes, it allows the family, because these things often happen very quickly, like with a stroke or somebody falls down the stairs or something. The family often operates in crisis mode, as you know, and this does allow them peace where they can say, don't worry, we've got insurance to cover that while we make all the other arrangements. Yes.
Gotcha. So what was the age of these clients, and what type of benefits did you get for them?
They were 79 and 75 years old, and we really gave them a top-of-the-line product. We maxed out the facility benefit at $300 a day. We maxed out the home care benefit at $1,200 a week, and that was a 2-year benefit for each of them. They were very happy to have that.
Okay, so some policies, they're 360 days, but they offer you both 360 days in a facility as well as an additional 360 days at home to start off with.
That's correct.
Okay, and how much did this plan cost? This is more of a higher end short-term care policy.
Well, for the husband, who was 79 years old, his premium was about $410 a month. And for the wife, who was 75, her premium was about $280.
Okay, so still a reasonable cost to get them a couple of years of coverage if they need it. And again, because they failed the cognitive, obviously there's this real risk that they're going to need it in the near future.
Yes.
Okay. Well, I appreciate you sharing that story with us. I do think more people and more states obviously should be offering short-term care, as long as they have a specialist working with them to help them navigate what the client needs are and what the benefits are. So one more thing I'll ask you is, I know, this is kind of an alternative to long-term care. How do you feel about long-term care relative to short-term care in terms of what advisors should be offering to their clients?
Well, my heart's always going to be in long-term care. That's what I grew up on.
Hmm.
I always think that people, if they can qualify for a traditional long-term care policy and if they can afford it, then
Hmm.
that's the route that they should go.
Hmm.
Short-term care really should be option two for people who either can't afford it or can't qualify in health for health reasons.
Right. And I know you mentioned that a lot of people, one spouse actually qualifies, but the other doesn't, and that can be a solution for both of them.
Yeah, it's a great way for a planner to be able to place the policies. You know, anybody in long-term care will tell you when you have a couple and one of them gets declined, very often the other one won't take their policy because they're insulted somehow.
Right.
And this is a great way for the planner to say, okay, yes, you were declined by XYZ, but I do have an option for you and it's a good one. Let's take a look at it.
Awesome. Well, thanks for being on this episode. I hope you'll join us on a future episode as well.
Thank you, Mark, for the opportunity. I really appreciate it.